Hello, and welcome to the January 2020 Market Update from Commonwealth Financial Network. My name is Brad McMillan. I'm Commonwealth's Chief Investment Officer. First of all, Happy New Year and Happy New Decade. We closed out the year and the decade on a burst of strength. December was a great month and it capped a great year. We saw U.S. markets for the month up over 2%, in some cases considerably more than that, and up over 20% for the year. That's a great year no matter how you slice it. International markets also had a strong December, and they were also up double digits for the year. Again, a very, very strong year. Thing is, though, this is not what we expected at the end of last year. If you remember, last Christmas Eve, we actually hit the bottom of a significant pullback. And at the end of the year, the rebound was very, very iffy. We didn't know what was going to happen. What we thought we were going to see, we thought we were going to see a recession, we thought we were going to see a continued market pullback, but of course that didn't happen. What we did get was steady growth. Yeah, we had a bit of a slowdown in the middle to the medium part of the year, but nonetheless we actually saw growth continue. And in recent times, we've actually seen growth start to pick up a little bit. We saw growth accelerate from the second quarter to the third quarter, and the news since then has been even better. In December alone, for example, we saw job growth come in much stronger than expected, continuing a trend that has more and more people joining the labor force. We saw wage growth continue so that both income and spending are still going up steadily, 9 months in a row at this point. We got the Fed behind us. The Fed cut rates this year, and that's continuing to stimulate the economy. And because of all this, consumers remain confident. And that has been what is driving the expansion and what is likely to keep doing so. Good example is housing. Housing is doing very, very well, much better than we expected. New home sales were at the highest level since 2007 in December. That's a remarkable number. There's a lot of confidence baked into that. We saw home builder confidence at the highest level in over 20 years. And the reason housing matters is when you buy a house, you're not just buying a house. You're making a bet over the next 10, 20, 30 years that you're going to stay in that house, and that's going to be a good bet. That reflects a lot of confidence about the future. And remember, you're not just buying a house. You're buying furniture, you're buying lawnmowers, you're buying everything else that goes with it. And that also can act as a signpost for faster growth in the future. When we look at housing as an expression of confidence and as an expression of the future of the economy, the signs are pretty good right now. So we're in a good place to end the year. December's a great handoff to next year, and although there are still risks out there, politics certainly being the biggest one, we have the election and the trade war, both of which are certainly going to rattle markets. Nonetheless, we are ending the year in a good place. This is a good place to be, it's a good year to look back on, and I'm very, very happy to be closing the year in this place. So that's it for this month, this year, and this decade. Thanks for watching, and I'll see you next month in February for the next update. In the meantime, if you're interested in this sort of thing, check out my daily blog, The Independent Market Observer. I post something every day that talks about what's going on. Thanks a lot, and Happy New Year.